What's up, guys? As you've probably already noticed, the Russia and Ukraine situation has not been friendly to the U.S. stock market, or in that case, any stock market. Even the foreign markets are being hit, if not even harder than the U.S. markets. And inflation's rising, and the Fed is set to raise interest rates to try to battle this inflation problem. So what does all this mean for the stock market? Well, that's exactly what I'm going to go over in this video, and I'm going to go over some different ways that you could hedge that inflation risk and different things that you could be investing in times of recession and times of high inflation. So let's get started. The Fed is set to raise interest rates the 15th or the 16th of this month, and they're planning on doing about a quarter point or a half point increase. So really nothing much. I think the markets might have already priced this in. And to be completely honest, I don't really even think that the Fed is going to come out and do this rate hike as planned because of the way the markets have reacted recently to the Russia-Ukraine situation, which is horrible what's going on over there. I hope it all straightens itself out here soon. But I don't know if they can go through with it, because if they even raise interest rates a little bit, it might pop this bubble, this fragile bubble that the stock market is in. And I think we've already seen that inflation is not transitory. It's here to stay for sure. I think that there's a lot of different options that we could be looking at in terms of hedging that inflation, and I'm going to be going over those later in the video. But as of right now, I want to look at this inflation problem. What is actually going on with this inflation problem? And can the Fed even fight it? I don't think so. I think they would have to raise interest rates so much to actually fight this inflation problem that the market would just implode. So when you look at this chart, you can see from 2017 to 2020, inflation stayed right around 2%, which is what the Fed shoots for. But after 2021, inflation has just skyrocketed, and it's showing no signs of stopping, and I don't think it will, because this inflation is not transitory like the Fed originally thought, and they are also admitting that it's not transitory. So when they admit that it's not transitory, it's not transitory. They're not going to do anything about it either. And also, inflation has a lag effect. So what we're experiencing now is only just a glimpse of what we're going to be experiencing in the future. This is just the start. All the spending that the government's been doing, just pumping money into the economy with people really not working at all. They were sending checks to people that weren't working. So we weren't producing anything, yet we were getting all this money and spending it. So what do you think is going to happen to prices? They're going to skyrocket, and that's what we're seeing now, and it's just going to continue here into the future until we actually start making things. So even though some of the speculative bubbles have already began to pop, I still think that there are ample opportunities out in the markets right now. There are definitely places that you could put your money that are going to generate big returns for you in the future, and that even though they might be going up in price, they're still at a reasonable valuation. And two of those stocks that I wanted to point out are Procter & Gamble and Berkshire Hathaway. Because in recessions, value stocks become cheap, but after that, they kind of return to normal levels. And I think they have been going up recently, but they're still cheap. They're still cheap compared to the speculative stocks that still haven't dropped as much as they should have up to this point. And during periods of high inflation, when times are a little more uncertain and people want to put their money in something a little bit safer, value stocks do better. And when you look at the S&P 500 index, you can clearly see that it's overpriced. I mean, the only reason I think that it is still at the price it's at is because stocks like Apple, Amazon, and Microsoft haven't dropped nearly as much as they should have, and most of the speculative stocks have dropped down to reasonable valuations, but the stocks that are still a little bit too high have kept the indexes high enough. But once those start to drop, I think the indexes are going to drop even more. And as you can see, I think it's going to drop to that regression line, if not drop even more than that blue regression line that I have drawn there. And the funny thing is, in terms of an inflation hedge, I was actually looking at some Russian stocks earlier this week before they banned them on all the trading platforms, because I thought that they were just at such great valuations. They had dropped so much. Of course, it was a gamble, it was a calculated risk. But stocks like Lukoil had dropped so much, and I figured the price of oil is rising so much it hasn't been down below $50. The price of Lukoil hasn't been down below $50 since the price of oil was $30 during COVID, during the COVID crash. Now oil's $100 and Lukoil's sitting at like $15. Maybe it's like $10 now. It's insane. So I figured, okay, for this small chance that everything kind of blows over and things go back to normal over there, somewhat normal, that stock would go back up to $100. But unfortunately, they cut off the trading of Russian equities, and I could not put any of them as buying recommendations in this video. And another thing that's a good inflation hedge is gold, and people are moving their money into gold too. As we have seen here recently, the price of gold is going up, gold stocks are going up, and I think that this is just the beginning of that trend also. So when you look at this chart, I really think that it shows you all that you need to know. It really has gone hand in hand with inflation. And also, I think that it kind of anticipated the move. I think that if you look at the inflation chart and this gold chart, that this kind of jumped before inflation even really started to ramp up, because people were thinking, oh, people are going to start jumping into gold. But when that didn't really happen at first, that's why I think you see this initial drop. And then it's kind of starting to move back up. And I think it's going to continue to move up, especially with the way that the dollar is going to be under pressure with people leaving U.S. equities and entering foreign value stocks. So we're just going to have to see. But as of right now, I think that this is a terrific investment option, at least for a diversified portfolio. But other than gold, what other inflation hedge is there out there in the markets? And as I mentioned earlier, Procter & Gamble and Berkshire Hathaway are both great companies. So I just wanted to dig a little bit deeper into Berkshire Hathaway. And Berkshire Hathaway is a true value stock. They've grown their earnings from $122 million in 2000 to $4 billion in 2021, which is over a 30-fold increase. And even though Berkshire Hathaway has been going up here recently, I still think that they have room to grow just because they generally do better than the market in bear markets, which we are in right now. And I think that we are going to be in here for a good while. I think that we have room to go. So that's it for today's video. I hope that you guys have a better understanding of what the Fed is planning on doing in terms of raising interest rates and what it might mean for the stock market, as well as what inflation is doing to the stock market and what we can do to combat it. And if you have found any of those things to be helpful, I ask that you just punch that like and subscribe button, and that you leave a comment down below. Thank you guys for watching, and have a great rest of your night.